Today, I bought a new position in Whirlpool stock, WHR. Our estimated income is about $103,000 now per year, thanks to the last funds we just bought, those Tesla funds and OARC funds. Check out those past videos. It's the way to play Tesla, but through 65% dividends off Tesla. Now I'm buying Whirlpool because it has a 5% dividend. It's a best of breed, and it meets my needs for housing exposure. So look at this chart. I mean, it's come off all the way off its highs from 199 to now 130. And it was at 250 formerly in 2021. So from 250 to 100, I thought, and it has a 5% dividend there. I thought this was a good pullback. It was a perfect buying opportunity. I've always wanted Whirlpool back at this price because I remember a few years back I had it around this price, wasn't patient enough to hold it, and then it just took off. I remember it was probably around the 2018 time when we were around 100. I saw that this was a pullback to the 200. I wanted it. I probably sold out and got shook out around here, and then it just went all the way up to 250 from 100 almost. So that's a double, more than a double. And now it's pulled back. Well, look, it's back on the 200-day moving average. So this is the time you buy something like Whirlpool. It's a top quality name. It makes higher highs and higher lows over time. It's pulled back to the 200-day moving average, and it has fundamentals in its favor too. It has macro trend in its favor. Lower interest rates means more people will be buying houses again, and even if rates stay high or elevated or even rise slightly from here, people will want to stay in their houses then. And when you stay in their house, you have to remodel and you want to upgrade it. This is what Whirlpool is good for. People need new appliances all the time. They need to improve the value of their house. Here are some of Whirlpool's products. They do everything in your house, from consumer, from dishwashing to washer and dryer machines to refrigerators. They have it all, okay? This is everything you need. I also went on their website. They make I went on their Seeking Alpha for their earnings. They made about $20 billion in revenue, I want to say, last quarter. So this company is, they make tons of money every year. They said their cycle times for washer and dryers have shrunk by 2 years. So people will need to upgrade their appliances 2 years quicker than before. Again, they return most of their cash flow, all their free cash flow, to shareholders in the form of dividends. So I like Whirlpool for its 5% dividend. It covers my margin interest, which is about 5%. It's pulled back to the 200-day moving average. We need income. It fits sector, consumer cyclical exposure and housing at that, because I want more housing themes, because there's a shortage of houses, and housing is going to be strong for the foreseeable future. So we're up today, 6,000, 0.95% is really what matters. What's the S&P and Dow up? The Dow's up 1%, Nasdaq's down 0.5%, 0.3, and the S&P's up 0.3. So we're up 0.95. That's what you want to see, thanks to our higher weighted funds. But our stocks, our funds, we have tens to 20s of thousands in. Cornerstone, we have a couple 100,000 in, as you can see here. But a couple 100,000, as you can see here in Cornerstone, and 15 and 10 and all these higher quality funds. But our stocks, they moved to 1,000 because I don't want the risk of stocks. So we bought 1,000 in Whirlpool, almost 1,000. I'm probably going to add to it on any weakness to get it up to 1,000. 5% dividend covers this margin interest, which is 300,000. 5% on 300,000. 10% would be 30 grand. So my margin interest is about 15 grand a year. So as long as each stock I buy covers my margin interest, I'm happy. So I just want to show you, I did show you Whirlpool on the chart. 200-day moving average seems like the perfect time to buy. Consumer cyclical has been getting killed. All durable items, which are large, high ticket items, large, higher price items, they've been coming down as people can't afford them, as interest rates rise. They've been coming down in price. Stores are marking down their inventory, so this is now a good time to go buy a Whirlpool appliance. If I was a homeowner, which I am, but I just moved in about 3 years ago, so I'm not looking to update my appliances anytime soon. But I'm sure a lot of people are. They're going to find them at discounts now as they go to retailers. So that should help Whirlpool's stock price, and that should create the bottom that you're seeing at the 200-day moving average. So that's Whirlpool. We have a lot more exciting funds that we invest in, and we have a lot more exciting stocks that we talk about. Again, we made a video earlier today about Tesla and OARC, which is a covered call index on Tesla and ARC funds, and they pay 65% dividends, much more exciting than Whirlpool's 5%. But anytime you see a blue chip name like Whirlpool on its 200-day moving average on a max time frame, and you need to meet diversification, you need to fulfill those needs in your portfolio. I did not have a consumer cyclical play that had a good dividend. I knew a lot of consumer cyclical plays like, Nike or something, but they didn't have a good enough dividend for me. Whirlpool has that dividend. It's cheap on its charts, blue chip name. So I'm buying Whirlpool. I'm going to add to it on any weakness. Leave comments in the comment section below if you have any other ideas on consumer cyclicals, or if you have any other information on Whirlpool that we should all be aware of. Thank you very much.